Enron Corporation, America's seventh largest company, $60 billion in assets. Wall Street darling, Fortune's most innovative company 6 years straight. December 2001, files for bankruptcy. Largest corporate collapse in American history. At the time, thousands lose jobs, billions in shareholder value vanish overnight. Retirement accounts destroyed. Here's what Wall Street didn't know. The entire company was a fraud. Elaborate accounting scheme hiding debt, inflating profits, deceiving everyone, and the smartest people in finance never saw it coming. If they missed it, what makes you think you can spot the next one? This is Enron, the scandal that changed American business forever. Exposed how accounting rules could be weaponized, revealed Wall Street's willingness to believe anything, destroyed one of the world's largest accounting firms, sent executives to prison, created Sarbanes-Oxley regulations. Every modern corporate governance rule exists because Enron proved the system was broken. If you're starting to recognize how financial innovation becomes financial fraud, comment which modern company feels like Enron today. Subscribe because these patterns repeat constantly and understanding them protects you from becoming collateral damage. Houston, Texas, 1980s. Enron starts as boring natural gas pipeline company, moving gas from producers to utilities. Steady business, reliable profits, nothing exciting. Kenneth becomes CEO, 1986. Ambitious, politically connected, envisions transforming Enron into energy trading powerhouse. Hires Jeffrey Skilling from McKinsey, 1990. Skilling brings radical vision. Don't just move energy, trade it like stocks. Create markets for everything. Transform physical assets into financial instruments. Wall Street loves this story. Innovative, disruptive, future of energy. Skilling implements Mark II market accounting 1991. This becomes the weapon that destroys everything. Traditional accounting records profit when cash received. Mark II market records profit when contract signed based on projected future value. Sounds reasonable for trading business, but opens door to massive manipulation. Enron signs 20-year energy contracts. Immediately books entire projected profit as current revenue. Doesn't matter if profits never materialize. Doesn't matter if projections wrong. Revenue recorded today. Stock price rises. Executives get rich. But there's a problem. Eventually, actual cash must match booked profits. When it doesn't, Enron needs to hide the gap into special purpose entities, SPEs, technically legal structures that become fraud vehicles. Enron creates hundreds of them. Names like Chuko, Jedi, Raptor, moves debt off balance sheet into these entities, makes Enron look profitable while hiding billions in losses, uses company stock as collateral, creates circular system where stock price must keep rising or entire structure collapses. Andrew Fastow, Chief Financial Officer, runs this EAP empire, personally profits millions from managing these entities, while serving as Enron's CEO. Massive conflict of interest, board knows and approves, everyone getting rich while fraud grows. Wall Street analysts give Enron by ratings. Nobody questions complexity. Difficulty understanding business, considered proof of innovation. Not warning sign of fraud. Stock hits $90 per share, August 2000. Market cap $100 billion. Enron more valuable than many industrial giants. Sherron Watkins. Enron Vice President sends anonymous memo to Kenneth, August 2001. Warns accounting improprieties will cause company to implode. Lay ignores it. Investigates who sent memo instead of investigating fraud. October 2001, Enron reports first quarterly loss. Admits $500 million error. Restates financials back to SEC begins investigation. Stock collapses. Trading partners demand collateral. SPE structure unravels. Billions in hidden debt suddenly visible. November 2001, Enron admits overstated profits by nearly $600 million over 4 years. Stock at $1. December files bankruptcy. $16 billion in assets vanish. 4,000 employees lose jobs and retirement savings invested in Enron stock. Shareholders lose $74 billion. Arthur Andersen accounting firm that audited Enron convicted of obstruction for shredding documents. Firm dissolves. 85,000 employees worldwide lose jobs. Skilling gets 24 years prison. Fastow gets 6 years. Lay convicted but dies before sentencing. But here's what matters. Enron was an exception. It was template. Revealed how easy gaming system is, how willing Wall Street is to believe growth stories, how accounting rules can hide reality. WorldCom collapses next year. Same pattern. Lehman Brothers 2008. Same tricks. Every major fraud since uses Enron playbook. Complexity, hiding fraud. Mark-to-market manipulation. Off-balance sheet vehicles. Circular value creation. Pattern repeats because incentives never changed. Executives compensated with stock options. Pressure to meet quarterly earnings. Wall Street rewarding growth over profitability. Analysts conflicted, working for banks that earn fees. Auditors paid by companies they audit. Regulatory captor, revolving door between industry and government. System designed to enable fraud, not prevent it. If this showed you how fraud hides behind complexity, subscribe. Financial innovation often means fraud innovation. Understanding difference between legitimate business and accounting tricks is only way to protect yourself. History doesn't repeat, but fraudsters definitely do.